same report shows the growth in the number of businesses. So the number of businesses that are opening up, right? And that is growing faster than the rate of the overall market. So to me, like my conclusion is like, okay, the metaphorical pie is like staying the same, but every business's slice is getting smaller and smaller.
This is the PMP Industry Insider Podcast.
Hey everyone, welcome out to another episode of the PMP Industry Insider Podcast, where we take a look at what is changing in the pest and lawn industries, and we take you to the front lines to those that are driving those changes. As always, I'm Donnie, Shelton, owner of Triangle Home Services, which has Triangle Pest as well as Triangle Lawn. And with me is the ever-present New Jersey resident as of now, Mr. Dan Gordon. Dan, would you like to say good morning still and introduce yourself, our sponsors,
Sure.
our peer groups, our topic, and our very special guest? You got all that?
Yeah, so we are here in sunny North Carolina in the studios of Shelton Avionics. And we are, this is what happens when you're, a big pro like Donnie. And so he's having me down here, and this is terrific. And anyway, Dan Gordon from PCO Bookkeepers, PCO M&A specialists, the drill. Let's see, make sure that I don't screw this up. Okay, this episode is sponsored by Coalmarch by WorkWave. To learn more about digital marketing, visit coalmarch.com. It's also sponsored by PestSure. If you're interested in insurance for the pest control industry, pestsure.com. And today, did I forget anything else? Yes, I'm sorry. Additionally, you may have heard the news that we've expanded our PMP Industry Insider offerings into peer groups, which is actually why I'm here in North Carolina, because we just did one and it was outstanding, in partnership with industry veteran David Billingsley. So go back and listen to episode 136 or visit pmpindustryinsider.com/peer groups to learn more. And today, this is the million-dollar question that everybody wants to know. We're going to talk about whether demand for home services is really slowing down. And we are having back for a unprecedented third time, Rachel Betterbid, VP of Digital Marketing at Coalmarch by WorkWave. Rachel joined us in episode 26 and 49. And today she's going to discuss some of the data and observations around whether demand for home services is slowing in 2023, and some of the recommendations that for companies that are looking to remain high growth or whatever. And we're going to talk about that. With all that, welcome, Rachel.
Hello, thanks for having me. Just out of curiosity, who is your most visited guest so far? Like, who has been on the most, and who do I have to meet?
You are the pioneer. Yes, you're number three.
Really?
We have not had a guest on for 3 times. So you're the first breaking all the barriers and breaking all the records and breaking all the stuff that can be broken. As
you guys
usual.
Can't get rid of me.
No, it's fantastic. It's fantastic. So RB, I'm excited about this topic. It's one that I know that there's a ton of talk about it. Dan was talking about we're here in North Carolina at a peer group. This was certainly one of the big topics that we talked about, is digital and how it's changing and what can we do. And so, I think this topic that we're going to be talking about is top of mind for most folks in our industry. So let's get into this. Let's talk a little bit about, obviously the topic is demand actually slowing? Why are people seeing less leads? Why are they costing more? I think that's a common thread I hear with everyone. So with that, take it away, Rachel. School us. Let's hear what you have to say.
Oh gosh. Well, I feel like to kind of start it off, nothing I'm going to say here is groundbreaking, in the sense that I think we all know 2023 has been a very challenging year for just businesses in general, but I think especially pest control, home service business owners. And there's a lot of different factors that are contributing to this. Again, I don't think any of this is groundbreaking. I'm sure you guys have talked about this a lot in your podcast the last, year or so, as far as inflation hitting a record high last year, and interest rates have continued to climb. And as someone who just bought a house, they're insane. So I understand why, in general, the housing market has slowed down, because who can freaking afford to buy a house in this day and age? But home prices are continuing to rise, right? There's all these macroeconomic conditions that are inherently affecting the pest control industry. And I think, from our perspective as the people who do the marketing and kind of own the performance and the results of our clients' businesses, not just their marketing, but just kind of their growth in a way, it's been a very challenging year. And it's been, hard to kind of get to the root of what is the true issue and how do we kind of try to combat it and where do we go from here, right? But for me, it's been just trying to truly understand all of the different factors that are at play that I think are sort of, one by one may not be groundbreaking, but it's kind of created the perfect storm of, there is less demand for home services in general, but, I think a lot of what we're going to talk today about is going to be more pest control. And there's more competition than ever. So combine those two things together and it's not looking pretty. So that is kind of where we're at. I'm curious to hear, from you guys each have unique perspectives as a pest control business owner and as someone who, works with a lot of pest control business owners. Is this kind of a theme that you're hearing as well?
So I have a couple things I can just talk to via Triangle. I mean, and Dan, I'll let you do kind of the peer group perspective here, but at Triangle, we are up in revenue this year. And we're up significantly. We're up about 16 to 18%. I expect us to end between 18 and 20. And I think if most folks are listening, if you know the size of Triangle, that's fantastic. I don't think it's fantastic because the reason I don't think it's fantastic is because our customer counts are flat. We've been net negative accounts all year long. We just flipped over last month. There's been the thing that has really saved us this year has not been leads. It's actually been the price increases that we pushed last year and really throughout the pandemic. And so we have churned a lot of customers. We have, we have changed our customer database quite a bit in terms of through price increases, but our customer net accounts and our leads, we are really struggling, and we've had a tough year. And I say really struggling. It's not like it's, nothing, but it's just like nowhere near like what we were getting, and our costs are still the same. So that's the very micro Triangle perspective, and we operate in 3 different markets. But Dan, would you say that's any different than what we just talked about over the last couple of days?
That's at the peer group. That's kind of what we're seeing, and we're seeing that throughout our client base. Luckily, our clients are the revenues are increasing, but the customer counts are pretty flat or anemic at best, right? So then, if that were happening in the past, you'd say, well, you're growing, but maybe you have an attrition problem, and all you're doing is replacing what you lost. But I don't think it's that way. I just think that there aren't as many fish in the pond, and but people. The one thing that we're seeing is that people got to pass with price increases because of inflation. Everybody else did it. And so that's definitely what we're seeing. But we are seeing some small pockets, and we'll probably get into this, Rachel, a little bit more, but we are seeing small pockets of people who are doing like Google Local, who are killing it. I mean, just doing a great job, and their cost per lead is pretty low, but that's not the rule. That's the exception. And it's usually in a small market. I mean, I don't know if you're seeing any of that.
Yeah, I think the the companies that are struggling the most right now are actually not the small guys as much. I think you were saying, Donnie, at a certain size, when even you want to grow 10%, that is a lot of new customers that you have to add on. And so it's like, is the opportunity and is the demand there to even warrant that kind of volume? And if it's not, then how do you reach those goals? So in our experience, I think it's actually, not so much the smaller emerging companies that are struggling nearly as much as kind of like the mid-size and larger corporations that are kind of like the volume isn't there to support even a 10% growth goal when you're at 25 million, because that translates to a lot of customers that you need to sell. So that's definitely what we're seeing as well. I've had a lot of these feelings as far as, feeling like what we're doing is not inherently broken. It's just, again, a lot of macroeconomic factors at play. And so for me, I've kind of wanted to dig into data to see, is there data to kind of support this notion? Because I think intellectually we all know, right, that these things are affecting businesses, right? We see what's going on in the economy, and it's been going on the last year or so. And we've talked about an impending recession and all of these things. So intellectually, of course it has to have an effect, but for me, I've wanted to find actual data specific to the pest industry to help support that. And so I kind of just want to go through the different data that we're seeing to kind of support this. And again, I think this is just one part of the puzzle to kind of reinforce this idea. And the most important part is like, okay, now we know that this is really happening. What do we do? Right. But, from a demand perspective, a lot of what we look at on the marketing side is going to be Google Trends, search volume, right? Like that very much dictates opportunity. If there is search volume, if people aren't searching, you can't
give me
spend.
the data. Let's do it.
Okay.
I'm all about some data. Let's hear it.
Okay. So I'm not going to give numbers as far as trends because this is more the way that Google Trends work is it basically shows popularity of a search term throughout years. And it's not raw number of searches because in general, just more people, are using the internet. And so that's not really a fair comparison. It's more of an index of popularity. So long story short, from what we can see in Google Trends, the demand for pest control and lawn care is pretty flat. There's not really much of an increase compared to last year, but it's down very, very significantly in comparison to 2021. So I think we all know 2021 was an insane year for the pest control and lawn care industry, especially home services, right? A lot of people were still working from home.
I was gonna say, we're all home then.
Yeah, we're all home. The home improvement, right? Like people were really focused on enhancing their surroundings, so forth. But some of the data that I found the most interesting, and it's kind of hard because, there's so many different segments of data from different people. Dan, I'm sure you have your own set of data that you work with your customers, right? WorkWave, we have data that we're able to pull from our customer CRMs to kind of see what this looks like. But one that I spent a lot of time looking into was Ebis World. I had never heard of it before, but from my research, it looks like a pretty legitimate market research company that provides all sorts of industry research on, all different kinds of industries. And there's definitely a paid report where it's very expensive and you can get much more information. But from the free version, they had some interesting statistics as far as just the market growth for pest control in the US. So this is not necessarily demand. It's not one for one representative of demand, but there's obviously correlations where if there is demand, the market in general, the pest control market should grow, right? And if there's not as much demand, the market may not grow as much. So I guess kind of keep that in mind as we go through that it had basically showed what the market growth, specifically in the United States, not, across the world, had looked like for the last 3 or 4 years and how different that looks in comparison to this year and even the previous 10 years. So I know it's kind of hard without a visual to follow numbers, so I don't want to get too in the weeds with the numbers, but 2020, the pest control market as a whole grew about 5%. And in 2021, that was nearly doubled at 11%. 2022 was still pretty strong at 9%. And from what they're reporting, there is a projected growth for this year of 1.7%. So that is a pretty significant decrease. Yeah. And the part that I find really interesting. Oh, sorry, go ahead.
Yeah. So that contradicts what we're seeing with our pest index that we do with William Blair and the correlation to like Rollins, who is it's definitely slowing down, but these numbers are pretty low. I think this might be worldwide.
No, this is actually the U.S.
It says U.S. Yeah. We're seeing more, but we're definitely seeing a slowdown. But I would love to know customer count because we measure it in revenue. I'm assuming they measure it in revenue, but customer count would be an interesting one.
Yeah. And for my research too, so when you say Rollins, is that more their revenue is growing? Is that more what you're seeing on your end?
So, but you can correlate Rollins, Rentokil, Ecolab, all the public companies. You can correlate that to the market itself. And our index are smaller pest control companies, and it's highly correlated to theirs, but it's actually greater just because it's easy to, if you want to grow a $1 million business by 10%, it's $100,000. If it's a $1 billion business, it's $100 million, right? So that's where that is. But in any event, I do think that we are slowing down. 1.7%. I'm not sure that I quite buy it, but
my question for you is because while doing my research, it definitely said Rollins has the greatest market share. Like, do you think that could be more representative of their market share just getting larger? Like the big players in the pest control industry, if they are still growing at a strong rate, are they potentially are they growing their market share and the industry as a whole maybe isn't growing at the same rate?
So there's some of that, right? They're doing acquisitions, but I think what's going on is that And believe it or not, the door-to-door companies are expanding the market, right? So half of what they do is steal other pest control companies' contracts, but the other half of what they do is they find people who never knew that buying pest control was a thing. And the door-to-door companies are proliferating. And that, I believe, is what is driving up or driving the growth in the industry right now. I don't know. Donnie, what do you think?
I think you guys are comparing apples to oranges, is what I think.
Because
the reason I say that is that, okay, market growth versus marketing growth, right? Like, I mean, to me, obviously Rollins is growing through acquisitions. Rollins is it's a unicorn, right? I mean, it's a massive company.
But their organic is pretty good as well. So,
but the question I have is, where's that organic being driven from? And you're right. If they're driving it through door to door, they're driving it through other channels. But ultimately, what I mean when I say that you guys are talking about two different things. Okay, so I realize this market growth is I'm assuming this is based on revenue. We're talking about marketing. We're talking about leads. If I'm an organic only growth business, I am much more dialed into what's happening with leads. If I did not raise prices, like how much of this growth is truly just based upon inflationary changes, like how much of that growth, and we don't know that, right? I mean, I don't know that they get it.
No, but a lot of our growth, we do know in our index, is related to price increases. There's no question about that.
And so then let's bring that back to what does that say about demand,
right?
Yeah.
And that's the issue here. Like I feel like, and you guys know I love talking about my feelings. I love coming on podcasts and public forums and expressing my feelings. But
you're a very touchy-feely guy.
100%. So what that's saying, and I'm making a couple of logic jumps here, is that demand is down. Like, period. Demand is down. Now, what we could split hairs, and what is it? 5%? Is it 10%? Is it 1%? I mean, hell, who knows? But with growth, like even if, like, let's just say this is off, and let's say it's not 1.7%. Let's say it's 5% or even 10%. The fact of the matter is it's way lower than what it's been, in 2020 and especially in 2021. And like in the case of Triangle, we're very dependent upon demand. That's what drives our business. We're not a door-to-door company. We've tried and failed, but reality of it is that we're absolutely dependent upon what's happening in the market and what is demand being driven, because we have an inbound strategy. And so I think if you're sitting back and you're like, oh my gosh, man, this year sucks and costs are going up. I mean, obviously, if you're not watching this on YouTube, I'm shaking my head. Yes, it's yes. I mean, it's it. And I don't think that you're unique. And I certainly don't think that it's uncommon. Does that mean that, we have a blockbuster year next year? I don't know what that means for next year, but certainly we're feeling the effects of, I think there's an inflationary hangover going on. I think the white collar, bloodbath that we just went through last year in terms of, we had a recession, but we didn't see it on the front lines, right? Normally when you have a recession, then who's getting the pink slip? It's the frontline folks. That didn't happen this recession, if you want to call it that. What happened was a lot of these tech companies just they cut a lot of staff. So a lot of white collar, it was almost like a white collar recession, which is a little different. So, and which is really our target customer. So I'm pontificating along with speculating, which could turn into, I don't know, a bunch of gobbledygook, which is what I normally say. But certainly if you step back for a moment, and even if these numbers aren't within 2 or 3% of each other, I think the clear message is that there is definitely an impact in demand that's happening.
Right.
And if you're a demand-based business, you are going to feel it. Does that make sense?
For sure. And the thing that I think concerns me the most is the same report shows the growth in the number of businesses. So the number of businesses that are opening up, right? And that is growing faster than the rate of the overall market. So to me, like, my conclusion is like, okay, the metaphorical pie is like staying the same, but every business's slice is getting smaller and smaller. And then you throw in acquisitions and the big guys are scooping up the little guys, and it's a bad place to be in.
The secret's out. It's a great industry. Everybody's starting new businesses.
Right. And so like demand is one thing, right? That's one issue, but then competition is a whole other issue in itself. Right. And like, these are the big, in my mind, the big two pillar issues that I think most companies are kind of up against. And, aside from this data too, we're seeing this representative in our CRM data as well. We've got, a ton of access to data and customers Our customers, and when I say our customers, I don't mean Coalmarch, but I just mean WorkWave, people using PestPack and so forth. And we're seeing the same thing. We're seeing negative growth across our customer base from what we can see in their CRM for Q1 and Q2 of this year. And so granted, that is the off season, but it's a far cry from the 10, 11% growth we saw in our customers and even just Q4 of last year. So I think objectively there is a downward trend, and we're all feeling the effects of it, right?
So demand is down and competition is up. Let's keep rolling.
So, so from a marketing perspective, kind of the impacts, like what does that actually translate to, right? From a marketing perspective, since that's what we're talking about, there's more digital competition, which means when there's more competition, ad costs are going to rise, right? There's, again, less opportunity for each business to really capitalize on the demand that is already there. Inflation, I feel like we don't talk a lot about the fact that inflation affects marketing too. I think from my experience, a lot of our customers are expecting to get more leads with the same budget. And they're very upset when that doesn't happen, right? Like they're upset when they have to start spending more in marketing and they get less because in their mind, they think, oh, marketing is an investment. It should pay off. But I always say that I don't think marketing is not invincible to inflation, right? Like definitely there's the same effects that happen here, right? We have labor costs that are rising. We can't lower our prices. We, just like you guys, as a pest control business owner, you have to raise your prices. We have to do the same thing, right? So it's kind of reframing the way that we think of a marketing expense.
So the way that fuel goes up and chemicals go up and food goes up, that's inflation.
Yes.
I think that the marketing that we're talking about, digital marketing, I think that Google has just figured out how to monetize even better. And that inflation rate far exceeds food, gas, chemicals, and whatnot. Mm-hmm. And it's just becoming more competitive, just like Yellow Pages did years ago and ultimately petered out. Do I think Google's petering out? Absolutely not. But I think that what you used to be able to spend $1 and get 10 back, now maybe 2, mm-hmm. 2.5. And where does that stop? That's a
right. And when we talk about inflation, I think there's kind of two categories. There's what you're talking about. There's ad placements, right? Like that is driven by competition. And as the landscape changes, as Google looks different and it becomes harder and harder to get those very coveted places, ad placements in themselves are going up. They're getting more expensive. They're getting more competitive. But then there's also the service costs, right? It's what the marketing people do, right? Like SEO is people doing SEO, right? And that is driven by talent and labor shortages and, rising technology costs. We have more costs on the technology front, so we can't afford to price our services lower. And this isn't even just Coalmarch. This is all marketing companies. So I kind of think of it in those two things, that like ad placements are getting more expensive, and even the service costs in which you're paying people to do your marketing, both of those are not going to decrease. So in general, this is a trend that is going to continue in my mind. Like, I think we need to get that out of our brain that we're going to be able to spend less and get more. Like, no matter what, you're going to have to spend more in marketing. And you're just like you said, Dan, like gas and groceries, like I'm spending more when I go to the grocery store. I'm not getting more groceries. It's just the price for individual things is going up. And so I think, that's something we all have to kind of accept, that marketing is never going to be a fixed cost. And as you diversify your marketing mix and as the landscape changes, you are going to have to continue to invest more in it. And it's not going to necessarily directly translate to, oh, I spent 10% more, so I got 10% more leads.
Mm-hmm. So we have talked about, and I don't want to get too far into this, but so let's just go through the big picture here. So demand is down, competition is up, pricing is up due to competition and inflation and these other pressures that are happening. I'm sitting back, and at the end of the day, what I see happening as an owner is that digital is becoming on the same level as door-to-door, as mass media. In the past, we've always been able to do digital at a fairly, I won't want to say it, well, it really was a fraction of the cost of other media buys and other marketing channels. So my question to you is like, now what? And how do we, I don't think it's wise to come off of digital. And I hear people saying, well, I turned off pay-per-click altogether. I don't think that's wise either. But my point is like, well, now what? Like, how do I position now to try to get the most of what is happening, and how do I make sure that I stay in a position where, I mean, I remember back in the day, I don't know what year this was, maybe like 2016, 2018 or whatever, but Google used to have this side panel for businesses, and you would go to like Raleigh, pest control, and we owned like the first 3 links. We owned pay-per-click, and we owned that side panel, and we just killed it. Those days are over, of course. But so what do we do now? Like, is it okay? Well, you really need to focus on locations. Is it you really need to focus on reviews? Is it like, how do you still compete and stay and maintain as much as you can out of the digital space?
Yeah, I think there's short-term things, and when I say short-term, like the next year or two, and then I think there's longer-term things to consider. So to kind of start with short-term, I think, what you said about people, all of a sudden, I'm going to stop investing in SEO. I'm going to stop investing in the channels that traditionally work for me because this year it's hard. I say don't do that. I don't think making huge changes in times of economic crisis for things that traditionally do well for your business is necessarily the right move. But at the same time, I do think you need to kind of reevaluate where you're spending your money and what that has looked like in the last 3 to 5 years and diversify that mix a little bit. So, I know with TPC, it's like you, for the longest time, were able to grow through just PPC and SEO. And that was great for that time, but that's not sustainable. So what do you have to do to pivot? You've got to bring in different channels. You've got to bring in different ways to market yourself. And it's more just diversifying what that portfolio of marketing looks like, right? And so, there's obviously other things that a lot of companies have already done, price increases, right? Like that is the biggest, probably quickest win is, right? Increase your prices, get more money from your existing customers. That can help offset the fact that maybe you can't bring on as many customers. But I think this is such a corporate term, but I feel like the lowest hanging fruit that a lot of companies are not doing very well, from my experience, is really maximizing those low cost and high margin like sales opportunities, as far as having a true system in place for upselling your current customers, or having a really good system in place for winning back canceled customers, and having a good system in place to maximize customer referrals, right? Like those things are relatively low cost in the grand scheme of things compared to maybe PPC or so forth, right? Most of it is centered around your current customers, and exactly what we were talking about earlier, where some companies are growing, but it's maybe not from number of customers. It's from, how can I squeeze as much revenue as possible out of a single customer? And some of that is price increases, but some of it is also get them on other services, get them back, like get them to refer their friends, their neighbors, family, things like that. So I think, to me, that is like the simplest low-hanging fruit. And I think some people are dabbling in it, doing a email campaign here and there, but there's not a true system leveraging technology that is being built to do this day to day for you.
Okay.
So what I remember at the end of the Yellow Pages, a lot of people said, we're going to pull our Yellow Page ad and we'll see where we fare. And a lot of people, me being one of them, was like, geez, don't do that. I'm scared. And they pulled it and nothing happened. But that's because they moved to Google. So if people dial back, and I agree with you, by the way, all those low hanging fruit things, they should have been doing anyway, because that has always been cheaper, is to do win backs, to do upsells and whatnot. But what is it? You're not going to stop doing Google. You just,
right.
Google's not going away. So what are some of the changes to the digital landscape, that you've seen in the last year or two?
Yeah, there's definitely been a lot. And some of this is not necessarily translating to marketing strategies, but more from the marketing perspective as someone doing marketing. There's a lot of shifts and changes happening just with data in general and privacy, and people using VPNs and emerging privacy laws and phasing out third-party cookies. And, what does that kind of mean? It means that data is becoming less reliable, and we can't rely on data and attribution as much to really figure out what are those very specific channels that are working well for me. There may come a time where you don't have an idea of how PPC performs, compared to SEO, because attribution is going to get harder and harder. And so looking at things very much in a vacuum, I don't think is going to be the future. I think it's you got to take a step back, look at digital as a whole, and rely on data, rely on what your peers are doing that's working, and kind of draw conclusions from the data that you do have, but not put too much stock into it. But also another really big change is just what we call on the marketing side is zero-click searches, meaning people are going to Google, they're searching, and they're not even making it to your website because they're finding what they need on the search results page. So the way that I think this translates most to the lawn and pest industry is people are looking at reviews, they're looking at Google business profiles, and they're calling straight from there, right? They're never even getting to your website. So they don't even have a chance to go to your website, learn your benefits, right? They're relying solely on what your review profile looks like and if you even show up and you're in proximity to them. So how much opportunity is being left on the table if you're not even showing up to begin with from people that are just never even going to make it to your website? They're not even going to make it to the bottom of the search results page. So in general, people are getting more and more impatient and they're looking for ease, convenience, fast decisions. So making sure that you have as much visibility for those zero-click searches, as well as just convenience, online booking, texting, web chat, just making it as easy as possible because consumers are getting more and more impatient and they want to make fast decisions. So how can you make it as easy as possible for them to make that decision? First step is you got to actually have visibility.
Yeah, that's really interesting because everybody has put so much time and effort and money into their website. What you're saying is the website's just not that important anymore. And I tend to agree because it's all about reviews, right? You never really need to go to the website, right? It's a total mindset shift, Donnie, are you doing much in that way? I mean, what are you doing with your website?
Yeah, we are definitely focusing on, the question becomes, what Rachel just said was really important was these zero-click searches. In marketing, it's all about what makes you different and what's the value proposition. If you don't have your website, and I'm not saying you don't because your website is still very relevant, but you have to be able to stand out even on those platforms. And so what's the only differentiator? Your location. Not too much you can do about that. There's little things that you can do, but your location and then your reviews and how well a customer is going to see, what you do. And so I just think you have to focus on it's back to the basics of marketing is how do we look different? And how do we differentiate ourselves and what are we telling the customer as to why we should be using us? And so those are at least on the zero-click search side. I think that's what you have to. And the other thing that we've been doing, which even in my book, I recommended that you don't do this, but obviously things change is we're doing a lot more branding. We want people actually searching our name now versus just, trying to go out and, pest control services near me or whatever. And so is it working? Well, I don't know. We're new in it, right? We're not far enough along for me to say, yeah, this is a proven strategy. It does help, and obviously we wouldn't be doing it if we didn't think it was gonna work. But at the same time, it's still early for me to say yes. This is the proven way to go. Does that make sense? So yeah. Okay. So here's the deal, guys. We are out of time already. And we kind of talked about this before we started the episode, which was that we knew we were going to run out of time. We were going to kind of set this up as to here's what's going on. And so I think for this episode, we're going to probably close it out here with this is what's happening. And we're going to bring Rachel back. And then we're going to really dive into this question of now, what do you do? And that's obviously one of them. I think that's what most people want to hear about. But I think it is important just to kind of set the groundwork of hey, here's what's going on. You're probably not unique in the sense that if you're feeling the digital pressure, everyone is. And now maybe you have a greater understanding as to why that is. But I think ultimately, the real question is now what? And so we're going to bring RB back on for another episode, really dig into that question and give you some good strategies on, how you can set up for, either salvaging the rest of 2023, which it's a little late for that, especially if you're in the Southeast, or really getting set up for 2024 and start making those moves in the fall so that you're ready to go come spring. So with that, Dan, anything to add before we finish out?
No, very, very interesting topic. And let's get you back, Rachel, very soon, because I'd love to hear it. It's we're going through a paradigm shift, and it'll be interesting to see, what are the next moves, because pest control is not going away. It's just how are you going to get to your customers and how are they going to get to you? So,
yeah, I think we have a lot more to unpack. So excited to come back and continue the conversation.
Well, Rachel, thank you very much for coming on board and chatting with us. It's always a pleasure to have you on, which means if we bring you back for another episode, four. 4 times.
Yes.
Yes.
Wow.
Yes.
Yeah.
Thank you for having me
it
back
would be-
and back and back.
But I will tell you that people will be very interested to hear the second half of this. I already know for sure. So with that, we're going to close it down. Just a reminder, all the resources and topics that we talk about today are available on the podcast website, pmpindustryinsider.com. And much like you, we very much appreciate any kind of ratings and reviews you can give us. If they're positive, please put them on Google or tell them to me. If they're negative, please pass that on to Dan. And with that, we'll say goodbye. We would say goodbye for today.
Good day.
Don't die today. We will all die at some point, but not today. And with that, we're going to sign off. We'll see you all next time.
Take care.
Bye-bye.